The cryptocurrency markets have been in a state of regulatory limbo for some time now, and various government agencies have been experimenting with different ways to regulate the industry. But so far, there has been no clear consensus on the best way to do so. So that begs the question, will regulating crypto bring more good or more harm? Well, let's answer this and other questions in today's video about crypto regulation and what's going on in the crypto world. All right, let's get into it. Okay, so what is crypto regulation? So crypto regulation is the legal framework that lays out the rules governing the selling and buying of cryptocurrencies on cryptocurrency networks. So these laws may include tax requirements, crypto company registration requirements, stricter requirements for stablecoins, and more like this. So then why is it happening? Well, cryptocurrencies have been long regarded as a wild frontier with no set of rules or regulatory framework governing the network. So why are regulations being imposed now? Well, the most compelling reason people are calling for a regulatory framework governing cryptocurrencies is the recent hacks, scams, and fraudulent activities impeding cryptocurrency networks. Elliptic, a security firm, estimates that more than 1 billion has been lost as a result of just 5 major hacks in 2022. Almost every other month, a new hack leads to some users losing as much as their life savings. Other concerns about the crypto market include its high volatility, which makes a large number of users and businesses hesitant and wary in making crypto investments. The recent news about Luna's collapse and the whole 3AC, Voyager, and Celsius debacle only made matters worse. Now, despite multiple efforts to develop technology that will prevent hackers and the loss of millions of dollars in investor funds, it's becoming clear that it may be time to consider stringent security measures. We've seen some major hacks recover stolen funds with the assistance of law enforcement, such as the recent seizure of 3.6 billion from a massive 4.5 billion cryptocurrency hack. So then there's also the issue of mass adoption. Users and businesses believe cryptocurrency investment is too risky. A regulatory framework may encourage increased adoption as people may feel safer investing their money in cryptocurrency. If users fall victim to scams or hacks, they will have more confidence in recovering lost funds with the government's backing. A regulatory framework may also encourage more companies to innovate if they feel more secure investing time and resources into the crypto industry. However, cryptocurrency is fundamentally based on the network's decentralization and pseudonymous transaction features, which begs the question of whether cryptocurrency regulation will cause more harm rather than good. Okay, so then let's take a bit of a deeper look at the pros and the cons. So let's talk about the pros. Well, first, people argue that crypto regulation will protect long-term investors. When the high volatility of the crypto market is regulated, long-term investors may feel safer investing their money in cryptocurrency. This could take the form of government imposing stringent regulations on the cryptocurrency market. However, the specifics of how this will work are still unknown. Okay, so then another pro, which we kind of already talked about, is that it says that it will prevent fraudulent activities. One of cryptocurrency's biggest challenges is hacks and scams that result in millions of dollars in stolen funds. Now, a regulatory framework may help prevent fraudulent activities from occurring. One of the proposed frameworks includes tracking network transactions larger than a certain amount of money. However, this would require cryptocurrency networks from all over the world to implement the protocol because the network itself is decentralized. It could also mean that the government will only allow verified networks to launch, thus preventing rug pulls. Then another pro is that it could also promote innovation. So some companies feel that allocating resources to the crypto industry is a risky move. So, a regulatory framework may increase confidence, allowing more companies to participate and eventually innovate in the crypto economy. Okay, so then of course there's also cons. So let's take a look at some of the cons. So on the other hand, a sizable number of people believe that crypto regulation will do more harm than good by disrupting the core tenets of cryptocurrencies. Some argue that crypto regulation will impose control over the network, preserving fiat currency's dominance in financial markets. Others are concerned that crypto regulation will undermine the transparency and pseudonymity of cryptocurrency transactions, which are the network's unique value propositions. Then there's also the main argument that cryptocurrency is a decentralized financial system that should operate independently of central authorities. There's also been heavy debate about certain DeFi protocols being registered as security exchanges, which may not be in the best interest of the current users subscribed to these platforms. And then, one of the biggest appeals of crypto is how it lowers the barrier of entry for access to financial services and products, but regulating the network may revert us back to traditional financial markets and their challenges. Okay, so then what is the current state of crypto? So most of the initiatives for crypto regulations are now coming from the US. So in 2021, there was a lot more scrutiny on the asset class, and today in 2022, there has been more traction as regulators have previously stalled, primarily due to the difficulty of regulating cryptocurrency. The Federal Reserve set the ball rolling in January 22 with its proposal for a government-issued virtual currency. On June 3, 2022, New York legislators passed legislation prohibiting specific cases of crypto mining using carbon-based fuels, reportedly to adhere to emission targets. On June 7, 2022, senators proposed the Responsible Financial Innovation Act to exempt stablecoins from taxes for small-scale payments of less than $200. On June 8, 2022, another rule was passed requiring stablecoin issuers to have clear redemption and the full backing of their coins. Okay, so that's the US, but what about outside of the US? Well, currently there are no internationally coordinated crypto regulations, but right now, 9 countries prohibit the use of cryptocurrency, the most notable of which being China's blanket ban in May 2021. Meanwhile, 42 other countries restrict or prohibit financial institutions from dealing with cryptocurrency exchanges. On the flip side, however, El Salvador passed a Bitcoin law in June 2021, allowing the use of cryptocurrency as legal tender. The law, however, did not accomplish much because most businesses never use Bitcoin in their transactions. Okay, so then over to India, where the government levied a 30% tax on cryptocurrency. The United Kingdom, on the other hand, has prohibited the largest cryptocurrency exchange, Binance, from operating in its country since June 28, 2021. While other countries like Japan have been more welcoming, legalizing stablecoins as digital money linked to the yen or another legal tender. And these are just a few examples of the regulations that have been imposed. Now, moving forward, it's unclear what the course of crypto regulation will be. Clearer rules are still being developed as the crypto community continues to weigh in on the best course of action. Whatever people's opinions are, though, it's clear that crypto regulation is a matter of when it's coming and not if. For now, though, cryptocurrency remains a highly unregulated, decentralized, transparent, and pseudonymous network that will take a lot more effort to assert complete control over. So that wraps it up for what you should know about crypto regulation. So what do you think? Is crypto regulation a good thing or a bad thing? Well, we'd love to know what your thoughts are, so leave them in the comments below. Also, remember to like, subscribe, and turn on the notifications for future alpha. See ya!